The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
And joining us now here on Market Talk as we continue our coverage from the 80th Annual National Association of Farm Broadcasting Convention in Kansas City, Missouri. Talking markets here right now with our good friend Mike Zuzolo from Global Commodity Analytics. And Mike, it's good to see you in person, my friend. We go so long with doing this over a video feed. It's good to catch up in person.
There's really nothing better than NAFB because there's so many people that I've met over the years that have become colleagues and friends, and I count you as one of them, Jesse. It's great to see you, my friend.
Yeah, it's great to catch up, and glad we could snag a few moments here today on the show for our typical Wednesday conversation. And midweek markets, it just kind of felt like the strength ran out a little bit in the grain and oilseed trade overall, a little bit weaker. Wonder if we used it all up, especially in beans early in the week. I don't know. What's your thought as you look at some of those closes, Mike?
Yeah, a couple things. Pinging off what you just said, we lost our weather market in South America, I think temporarily, but we lost it nonetheless. And so we had to go back and trade the outside markets. And even though the PPI data today supported the CPI data in that it was very weak, you would have thought that would have given the currencies and the crude oil another boost like we saw on Tuesday. But instead, it seemed like we reverted back to the mean of selling the crude and selling the wheat, and the macro fundamentals just jumped back on top of the market and said, this is a great sell. And when I left the office to head to Kansas City, we were dangerously close to that $75 low in the WTI crude on a small stocks build, and we saw the soft red wheat collapse again on a day trade basis, led by that European market hitting the 5-month low again in the Mata futures over in Paris. So I just kind of felt like that the market doesn't have any fear at all again in terms of Ukraine or Middle East, didn't have weather to be bullish on. Probably the biggest surprise to me, Jesse, was the fact that we still have the Biden-Xi meeting. Why didn't we keep some premium there in case we got some good news from Biden and Xi and they're connecting in San Francisco today? I'm wondering whether the market's nervous that they're not going to come up with anything good and kind of got ahead of it.
And that's a great point you raised there. I look at soybeans, meal, and oil. It felt like early in the week, corn had to kind of go with beans was the general theme, and just there was too much strength there in beans. But back to what you and I talk about quite a bit with wheat being the leader, once you lose that weather market in South America, so to speak, and lose a lot of those drivers, corn immediately looks like it's going right back to trade with the wheat market, Mike.
Yeah, I think this is a big deal again, and it smells a lot like 2023. I did notice that the hard red wheat did stay steady in the front end complex while the soft red went down over 11 on the close. I'm wondering whether we're going back to buying hard red and selling soft red because we're drying out again in the southern plains. Those crop conditions went down 3 points and good to excellent in the country instead of staying steady. I think the trade's a little bit nervous about that, but you're right. The funds are kind of picking and choosing, and they're not really wanting to step in and say, let's buy this market yet. And it really does go back to the wheat market. It really does go back to the crude market. And I think this is where I'm not going to let one day kind of scare me out of the market in terms of changing trend, because you and I have talked a lot about in 2023, the two big demand fundamentals that we had as headwinds in this market were China and the Federal Reserve. It feels like to me as we get to 2024, those are at least going to be neutralized. And so that's what I'm really looking for as we get done with President Xi and President Biden speaking together.
In the case of this corn market, we set a new low early in the week, and then we looked like we had a key reversal on the charts in D's corn, but then we give back about 7.5 on the day. Wednesday, get back around that 470 level. Are you worried that we're going to maybe look at putting in a double bottom here, so to speak, this D's corn contract ahead of options expiration? I know it was like 8 or 9 days away. Are you worried that D's corn could go back down and test some of those recent lows?
No, that's an excellent point, and this is what is going to be a problem as we get down to the wire at the end of this year if we don't get some solid news that brings the investment funds back to the table.
Sure.
It's going to be a very volatile, very wicked market. I'll use that term from a standpoint that we could be back trading 2 weeks from now, the South American weather again, after making a double bottom or a new low in the corn market led by the wheat. And so I have really kind of racked my brain for clients and subscribers and said, okay, how do I trade this market without leaving too much money on the table and still hedge rallies? And I really think that sell and defend model that I started talking to you about last week, Jesse, I think that's a big, big thing to consider if you're trying to manage that risk, because it's just like this week, I had rolled out some bean calls out to Marches from January. Some clients were saying, why don't we just take those off? Well, that was Monday. Tuesday, they said, I'm sure glad we kept those. It's just going to be that way because it's going to be a weather market until we get China and the Fed straightened out. And that's just going to mean extra volatility.
You mentioned the Fed, that CPI, PPI data we're getting manufacturing numbers here this week, a lot of inflationary monetary data out for this market. The dollar broke hard yesterday, and then things are a little quieter. Stocks were up huge on Tuesday. I mean, your overall take with how this data is looking here this week as we're near the end of the year, Mike. How's it playing into the commodity sector?
Yeah, and this is where it goes back to you just pinged off of what I was just talking about. If we don't catch pretty soon here, then the funds will probably go into a kind of a mechanized sell-off in terms of let's finish out 2023 on the downside. And I think that's why this week is so important. But to go back to your point to also that you made very appropriately, I'm still tracking that Bloomberg grain index against the 2-year treasury yield. We've talked about that a lot on Market Talk. We hit that major trend line of support on the 2-year yield and bounced right off of that. And that relationship between those two on a 2-month basis is still almost a negative 100% between each other in terms of their prices. And so we just got to break that yield and break it convincingly. And I think then we open up the door to more gains in the Russian ruble, more gains in the offshore Chinese currency, more gains in the Brazilian real. And then all of a sudden the trade puts together the idea, well, the U.S. exports for ag are probably going to start getting better as we get into 2024.
I'll back up a second as we get into 2024. I was thinking about this here. Overall, with risk management and grains, are you doing a lot when it comes to D's 24 corn, Nov 24 beans here, just with the way this environment has gotten? Are you doing anything major like that right now? Are you looking at anything analytics wise and talking to clients about that?
No, in fact, I had some D's corn puts on for some clients going into the end of last week. Nervous about the beginning of this week, just pulled those off right before the market started to go back down again. And so that's the way I'm playing it with the corn, is just picking and choosing, taking a 3 or 4 cent loss on an at the money put in case that market doesn't work for me almost immediately with clients. I'm in the red zone though, again, Jesse, with the soybeans. I want to finish that 23 soybean hedging up, buy it back in the March contract, start on 24 hedging. I think we hit 13-15 area on Nov 24, that red November beans. I guess not red anymore with November expiring in the 23, but I'm there when it comes to getting started in the 24 beans. The problem with the soybean complex right now is we're at a 160 to 163 production number for Brazil. 2 years ago, we were doing 127 and 130.
Sure.
Is the weather that bad that we could be back at 127, 130? You can't rule it out right now. And that's what's so hard about hedging beans, but it's great profit given the yields we've had.
Have you heard a lot of farmers selling on this recent rally, especially in the soybean complex here, Mike? Yeah,
I have. I think the bin space is a little bit tighter because the corn and bean yields were both a little bit better. Plus, they're drying a lot more than they thought they would with heavier moisture corn that they've had, wetter corn that they thought they would not have this year.
Overall, it feels like just this grain complex, we'll wrap up before we go to livestock. It feels like we've talked about this a lot. Now is just a very pertinent time to be smart about your risk management. Harvest is pretty much in the books at this point. We got a little bit more to go in the Eastern Corn Belt, it sounds like. But overall, farmers wrap it up, putting stuff away in the shed. Holidays are coming up, end of the year, tax season, etc. With the volatility that sounds like it's going to be in this market, it just seems like a pertinent time to make sure you're up to date and have a plan and a plan B and a plan C, right, Mike?
Exactly. And I think one of the things that's changed, and one of the things I'm going to try and bring out at the NAFB meeting that we're having, the panel meeting here later this afternoon, is I'm kind of like the big money fund people that are suggesting that these interest rates can't go down very fast. These inflation numbers are not going to go down much because a lot of it's built into the supply side, and the Fed can only do so much. And so hard assets, I think, are an attractive type of an asset, especially when you're at 2-3 year lows like the corn and wheat are right now. And I was very heartened by a Financial Times article today. I printed it off right before I came down, and Rabobank had put out their new food outlook for 2024. They too are talking about the global grain deficit and that we're going to be tight still 5 years in a row. You and I have talked about how tight the world wheat stocks to use ratios are, but we're just not looking at it.
We are joined today by Mike Zuzolo from Global Commodity Analytics here on Market Talk, live from the NAFB convention in Kansas City, Missouri. All right, Mike, let's talk livestock, cattle specifically. I want to get your thoughts in this cattle market with another cattle on feed report coming up on Friday. It sounds like that placements number could be a little hefty again. Are you concerned about that heading into Friday's report?
I am. You know, it's interesting. We're talking about this. We have just shaken off the negative supply numbers from the
last
October
month
report. Now it's almost like Bill Murray and Groundhog Day all over again. But you're right; those placements numbers are all over the place. The average is around 105, but the range is 99.8 to 108. And it's really hard for us analysts at this point, Jesse, to peg when heifer retention is going to start and when we're going to start building our herd back here in the United States, because we've got the drought and we've got the prices swinging so violently. And that's coming straight from the cow-calf people that I deal with. They're still wanting to retain. They still see a bright future. But I think quite a few of them pulled back the reins when they saw this price drop over the last 3 weeks. I'm encouraged that maybe we won't see as big of a placements number this time, and maybe we can keep it closer to the average of 105. But if we go over 105, I'd be very nervous about the feeder cattle. Best thing feeder cattle have going with them right now is the wheat pulling the corn down.
I was going to say that's got to help out that feeder market a little bit. In terms of risk management in cattle, I know you talked about being a hedger here. You and I have talked about that. Or locking at some floors, some puts, whatever the case is. I mean, are we still looking at that ahead of a cattle on feed report with some uncertainty Friday?
Yeah, I could easily do it in the feeder cattle at this price level after Wednesday's close. The fat cattle did close above in December, that 177.30 low from October. That suggests that if we don't have a bearish report in fat cattle, the momentum, the funds may want to come back in and join up again and take the market up a little bit more. That's one big difference now versus 30 days ago, is the funds are not nearly as long, and they're actually a little net short in the feeder complex for managed money funds. And so my mindset is stick with the feeders for right now. You get 184, 185, and I think clients, when I told them that this weekend on copy, they thought I had put too much natural light in the belly because I was talking 184, 185 cash markets. I still think they're a little short bought on the Packer side, but you get 184, 185, take it. Keep your marketings current.
I wonder, too, with all the inflation data out this week, obviously the demand at the retail counter, we've talked about that quite a bit. Some of the export demand out there as well. I wonder how much that could have an effect potentially on this cattle market. It feels like front and center is going to be this cattle on feed report, and then we can go back to maybe looking at some of those outside market fundamentals here in cattle.
Yeah, that's an excellent point, because what you want right now for the beef especially is a weaker dollar that charges up our exports and tamps down those imports, and that's a real key element to the early 2024 prices. And I think that's maybe the number one factor, because the trade's caught on to the idea that those imports are coming in a big, big way.
Hog market, I know a few differing fundamentals there, some things still kind of the same, but what's your big takeaway right now in this hog trade that just to me feels like it's kind of chopping around this $71, $74 range.
Yeah, I've noticed that the hogs and the beans are trading again pretty similarly to one another, and I think the hogs got pulled by the beans again on Wednesday. That pork and bean trade you and I often talk about. From a correlation standpoint, if you look at an 18-week price action between lead month hogs and lead month soy, it's almost a plus 0.75. So it's almost 75% in sync with one another on their prices. And so I think the hogs are really being driven by China. I'm going to use, going back to our earlier conversation, I'm going to use the hogs and the soybeans as some pretty important gauges as to what happens with Biden and Xi, and maybe what the market is expecting, and then what the market takes away from their meeting. In other words, if we see a strong rally in beans and hogs, maybe the market's seeing that as an improvement in the economic fundamentals and the relationship. And I think it can happen. I'm not sure we can do anything good on the geopolitics, but I think both countries are coming to the table realizing we're getting weaker economically and we need to help each other.
Good thoughts for sure. Before we let you go, anything else you would mention or reiterate to folks listening in today?
No, I think the big thing right now is to watch what happened on Tuesday to see if we can pick it up where we left off from those CPI numbers after we get this big meeting in San Francisco past us.
Okay, great. If folks want to reach out to you and talk with you about markets, take a look at your analysis and more, how can they get a hold of you, Mike?
Globalcomresearch.com. It's globalcom with 2 M's, research.com. Take a look at a free trial. Take a look at our product services brochure and see what we do.
Mike Zuzolo with Global Commodity Analytics. Good to see you, my friend.
You
I
too,
always
Jesse.
appreciate it. And that is going to do it for this episode of Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.